Let's move over right now to ord-oracle.com. Every Tuesday and Thursday, we are joined by Tim Ord. You can check out his website, ord-oracle.com. You can also check out our past interviews on our YouTube channel, Tiger Financial News Network. Just type in Tim Ord, Jacob Shoup, and you should be able to find those. Additionally, you can go to TFNN.com. Tim, how you doing? I'm
good.
I'm pumping your services here. We got 2 webinars from you, Tim, as well.
Keep pumping. That's fine with me.
Tim, how's it going?
Good. Let's take a look at the market.
Yeah.
Anyhow, I showed this last time. I took a smaller time frame instead of going back to 2009. I'm just going back to 2015, and you can kind of see. They're basically all of them came at significant lows, least multi-week lows, and this is the reading. Current readings, today's reading, we're at 0.41, and this is actually the middle chart is the American Association of Individual Investors Bull-Bear Ratio, and it's a 3-week average. So this has stayed this low for 3 weeks, and we're at 0.41 right now. I think below 0.75 is bullish. So everybody's just leaning on the bearish side, which is really good for rallies. Markets go up what they call a wall of worry. Market's always worried about something, and evidently is worried about tariffs because of
Yes.
As long as there's worry, if everybody's not worried, that's the time to worry. So, and right now you got enough worry to spur a rally here. How big a rally? That's why I'm hoping we see a sign of strength off this low, and if we do. Sign of strength is basically big volume and a really positive advanced decline line, and right now we don't have that. But we could still be early in the rally too, so we'll have to wait and see if that develops or not.
Okay.
But if it does envelop, then this whole year is going to be good. If it doesn't envelop, then we're probably in some sort of a big trading range. So we'll see how it goes. But anyhow, either way, we're at some sort of a low right here, right now. And actually that low was last week.
Okay.
But anyhow, it's still at a low. We still got further to go to the upside. And we'll look at the shorter term picture here too to show where we are. But this indicator, anyhow, the top window is the VIX, next window down is the SPX, it's the Standard & Poor's 500 on the weekly time frame. And it's a really easy indicator to follow. Every time you get a close below or close above the upper Bollinger Band on the weekly time frame, you're usually at an near-midterm low, and that happened a couple of weeks ago. Matter of fact, it even happened last week. If you look over here in the right window, we got the open-close below the lower Bollinger Band, and actually the week before we did the same thing. We open and close below the Bollinger Band. So that's one signal. The next signal is the one below it, which is the weekly VIX. So this is a weekly time frame. So it's you're not looking at daily. So you're looking, instead of a multi-day rally, the weeklies look at a multi-week rally. So we think this rally at least gets into April, maybe longer, don't know. But anyhow, the signal for the weekly is the VIX. You're getting above or below the, if you get above the upper Bollinger Band, that comes at lows. If you get below the lower Bollinger Band, we actually don't have them any right here, you're usually at a high. And last couple of weeks ago, we got below the lower Bollinger Band. And last time we did that was basically October of 2023. So it's kind of a rare signal. You don't get them a lot, but you get them 1 or 2 years at most. And so, these are all the other signals, but we got 2 signals here. We got a weekly VIX above the upper Bollinger Band, and you got the S&P closed below the lower Bollinger Band. And so that's kind of a double signal. That's what I like to do. I don't use one indicator. I try to get multiple indicators on signals.
Sure.
The dailies kind of blew out, so I had to flip to the weeklies to see where we are. But now the weeklies have flipped bullish, so we got a multi-week rally starting here. So let's look at the shorter term picture.
Yeah.
Here's another. The bottom window is the SPX VIX ratio on a daily. This is a daily chart. And it did get some bearish signs up there. I did see that, but I didn't take that signal. It would have been good if it did, but it didn't. And yeah, we're actually still long here. But even on the dailies here, we're getting positive signs. Here, the S&Ps make lower lows. The SPX VIX ratio makes higher lows. That's bullish. And now we had a big gap up on Monday. A lot of times you come down and test those gaps. And as long as you test those gaps on lighter volume, here's the volume on the gap, which is here. And yesterday's volume came in here. It's about 20% less. And the only thing you need about 10% less on a test of a previous high or whatever, or a gap, then that gap has support. So, and today we're kind of still in the gap, probably just closing the gap here. But this gap should find support. And at least we're going to go back up to this gap, if we not keep going higher. So we'll kind of wait and see what develops. But probably, my guess today is probably a low. Tomorrow, I bet tomorrow's an up day. Next week, I think it's going to be up, and the week after it's probably going to be up. So this is probably a multi-week rally. How we go? I hope we go back to the gap up here. We'll have to wait and see. But anyhow, I'm long. I have no reason to be out of this market. I should have actually. That's a long story. I'm still long, and for the moment, I'm still long. I see bullish signs here, so I still expect the rally in general to continue. So,
and let me ask you real quick. You have the arrows pointing down to the volume bars on those two candles. That is what's telling you that we're just filling a gap, and will most likely go up to that. I don't know what your target is, about 580, correct?
Yeah, actually. I do in my book. I talk about a lot of highs and lows and gaps and whatever. But as long as you test the gap on at least 10% lighter volume, that gap's going to hold support. And I forgot what numbers these were, but this is about from the volume on this day compared to volume going into the gap on this day. It was like 15% lighter.
I see.
And as long as it's 10% lighter, that gap's going to hold support. To get through a gap, if the gap has test of equal volume, that gap does not have support. It's going to keep going down. So you can think energy as volume as energy in the market. So if it's got energy pushing whatever direction it's pushing, that's the way the market's going to go. So if the market rallies up on higher volume compared to the down volume, it rallies up and vice versa.
I see.
So there's volume is a big part of my analysis here. So, and I think today's volume, it's going to be lighter than probably yesterday's volume. So that's another good sign, because today you're testing yesterday's low.
Fantastic. Tim,
right.
Can you stay right there? We'll go into the next break. Fantastic, folks. Welcome back, everybody. This is Jacob Shoup. We're joined right now by Tim Ord of the Ord Oracle. Tim, you brought up something about your book. You discussed a certain topic. Guys, you can go to his website at ord-oracle.com. Just click that book tab right there. Additionally, you can click newsletter as well. Get access to all of that. Tim, before we went to the break, we were looking at the SPY potential for this kind of to be a bottom right here, just closing the gap, and then movement back up to that gap from it looks like about March 10th.
Right. Okay. I guess one of your listeners, our listeners, I guess, talked about the trend. Yes. And that is true. The trend right now is not giving a lot of information. The 10-day trend, I don't have it right in front of me, but it's basically neutral, somewhere around one or less. And same with the 5-day, 3-day, 2-day. Actually, the 1 day today, we're actually doing pretty good. And it makes sense because we're probably at a short-term low here. But on the bigger time frames, the 5 and 10-day trend are not showing a lot of fear. Fear in the market is actually bullish. The more fear you have, and that's a trend reading of 1.2 or higher. And if you got a 10-day trend, that's like 2 weeks of trend fear. And that's really a lot of fuel for the market to drive it higher.
Sure.
And that's one thing on an intermediate term basis here. We don't have the fear. We have a consensus, or we have very similar readings, but that's different than actual fear in the market. Fear are people that are actually betting their money, and we just don't have it. So intermediate term wise, a 10-day trend at best neutral here is not a good sign for intermediate term. So I'm thinking this whole market could be a trading range here. If it trends up around 1.2 or preferably higher, then I think the bull market's still alive. We're going to go higher. So this 10-day trend is not a good sign. So I see it improve on rallies where the actual market goes up, trend goes up with it. And that could happen here, but it probably won't. So I'm thinking if we get back to the previous highs, which I think that's where we're heading now, is probably going to be resistance. Then from there, we'll have to reevaluate what goes on next. So this year will be kind of a tough year for the market. I don't think it's going to be a great big bear market. I think we're just establishing a trading range, more of a sideways market than a down market. So I'm thinking there's actually, I think I got that chart. Here's where I'm thinking we're going to go. Right here, this chart. Okay. This is skipping ahead a little bit, but here's where I'm thinking where the equity market in general is going to be okay. I think it's going to more or less move sideways, but I think the HUI, anyhow, the middle window, this window right here is the monthly HUI, which is basically the gold bug index, compared to the NDX, which is basically the NASDAQ, which is the NASDAQ. And there's a 12-year cycle here. The last time this became bullish, where gold stocks outperformed NDX, went from 2001, or it looks like they'll call it 2000, ran up 2012, and that's where gold stocks outperformed the NASDAQ. Then from 2012 to current 2024, NASDAQ outperformed the gold stocks. And I'm thinking this is flipping around right now on a bigger time frame. So I think that's where the money's going to stay in the market, just going to move itself out of the probably the equity market. So I think the NDX market this year is actually underperforming the SPX, and that's not a good sign. You want the NASDAQ to outperform the SPX, but the NASDAQ's actually underperforming the SPX. That's another reason why I think the equity market's going to take a rest, and some other market's going to take front and center, and I think that could be the gold stock index. So we'll see if that turns out.
You know, we've seen things like, sorry to interrupt him, but like on your point with the gold, like I kind of see that as well, that it seems like gold is so much, it's more attractive really than I think it's been in definitely recent times, right? Because usually you do these
12 years.
Oh, yeah.
Yeah, 12 years. So let me, I don't have I have a cycle here. I didn't do it. But anyhow, this is one of the reasons why this HUI monthly index and stuff. So you're going to see stuff, so these gold stocks are starting to pop all over the place. If they pop too hard and they're going up too fast, that's when they start to get to. But we're a long ways from that. Matter of fact, take this a step further. This chart goes way back. The bottom window is XAU gold ratio. So it measures the gold stocks against gold, and it goes back to 1993. The next window up is the monthly XAU. And so if you notice, XAU from 1993 to, 2024 is just a gigantic trading range. And so I'm thinking we may, at least at a minimum, we're going to go test this high of 2011, 2012, right up in here. And I think we actually may exceed it. But if you look at the inflation-deflation ratio, this is pathetically low. We're actually going back to 1993. We just hit a new low. And the way you can tell that you're at a high on the gold issues is when this ratio rallies up pretty fast. If anything above the monthly inflation-deflation ratio, RSI, is this window up here. And if you get above 60, which is all these red lines across the chart. So remember, this chart goes way back to 1993. We had 3 of them hit back in 2020, 21, looks like 22, and the market consolidated. Right now, we're at 0.37. RSI is around 38, round off numbers here. We got a long ways to go before we hit 60. And how high will that go? I don't know. But with an inflation-deflation ratio, if it does zoom up here to 0.3 or higher, and as RSI gets up to 60, then we're due for a consolidation at least, and maybe a big consolidation. Don't know, but we're not even anywhere near that level here. So we got a long ways to go.
Sure.
So even though we rallied up, we have rallied up, but I'm thinking we're still early in this whole cycle. So is gold stocks gone up too fast here lately? Maybe, but I'm thinking since we're at this trend line right here. I hope you can see this. My arrow pointing at it. This trend line goes back to 1993, and we're just busting through it, and we need a sign of strength to do it, and that's exactly what we're doing. And this head and shoulders pattern, what I'm calling right here, has an upside target 255, and the previous highs was about 225. So. Anyhow,
yeah, Tim, do you have any? Yeah, can you hold? Welcome back, everybody. Jacob Shoup, we're joined right now by Tim Ord of the Ord Oracle. We're talking about gold contract of 1.52%. You're taking a look at least over our friends with Direction. I mean, take a look at Nugget. That's the gold miners bull. This is a 2 times ETF. That's up 4.31% today. You look at the junior miners. You've spoken about a little bit with Tim Ord here. I mean, it's up 5.63% today. And you take that out on a longer term just to see what's going on. I mean, this is a fantastic movement in the junior nugget and the junior miners since February 28th. I mean, these leverage ETFs are kind of interesting, especially when you're like, hey, I don't know what to pick. Do I just pick one equity? Do I pick a basket? Why not check out something like that? Tim, what are we looking at with gold?
Yeah, it's actually going to get better.
Heard, yeah.
Actually, when time comes when I say, we about had enough, people are going to hate that word. So, because that's what happens at tops. It's too good to be true, and things need to back off. But anyhow, this chart here is looks at the bigger trend. We got a buy signal back in, I think it was March of last year. So the market has actually rallied over the last 12 months. I don't know, it looked like about 25 range. So we're up around 45 range now, so that's almost 100%, not quite 100%. But we're getting a little extended. You're starting to run into the upper Bollinger Band here on both of them, so you can see maybe a jump and a comeback test. But anyhow, you're going to see a sign of strength through this top windows of GDX, and at a minimum, we're going to rally back up to these old highs. And maybe we go straight up there, then come back. I don't know. We'll have to wait and see. But this is kind of the intermediate term. The bullish signal on the monthly time frames are on buy signals. So we're good for there. This is a chart that we talked about on a longer term scale. When this RSI on the monthly time frame on the inflation deflation ratio gets up around 60, those are usually intermediate term highs, if not even long term highs. Matter of fact, it picked out the high back in 2011, 2012. It got way up there, and the market went down for a number of years. So so right now we're not even close here for a signal of any major consequences. So things are really cheap because inflation ratio is actually, if you look at this right here, we're at the lowest level we ever been going back to 1993. That's really unusual. So things are cheap. Gold stocks are really cheap. So here's what I think is going to happen. We covered that. And let's get back to this chart. This is a shorter term chart. It kind of measures the strength of it's a 50-day average of the up-down volume. As long as this indicator is above zero, the uptrend's intact, and all this green shaded areas are times when this indicator was above zero. And we're up here about plus 18, but I'm thinking we're just going to stay up in this range. Be something like this over here, or something like we stayed above zero in this range for 16 months. Here we stayed about 5 months. Here was 7 months. I'm thinking we're going to stay up pretty much in this range for pretty much, I bet, rest of the year here. So gold stocks, I think, are just going to remain strong. There are going to be rotations. Some of the leaders will take a rest, and some of the ones that are starting to come off the bottoms are going to start show significant increases. And I've been kind of saying that for the last 6 months, and now it's starting to become obvious. Or I put it this way, not obvious, it's becoming more noticeable. And I bet a year from now, it'll be even more noticeable what it is now. So, so anyhow, that's what I'm looking at. I think gold stocks on the bigger time frames, potentially over the next 12 years, could be a good place to be.
Yeah.
So, and if that changes, I'll change with it. But that's prediction right now, and there's really nothing of any consequence of a top in here. We're just, if you look at GDX, which is the top window here, we're just finally just breaking out.
Yeah.
And we got this indicator. You know, if this indicator here at the bottom window falls below 0, that's the time that you'll probably pull back to the neckline. I don't know how we're going to do it, but we could remain strong here for, until July is what I'm thinking.
Definitely.
Not every week's going to be an up week, but a lot of times July through October, there's a consolidation phase, just seasonality wise. And that's, I think, July is not too far away. It's 3-4 months away. So not a long ways. And anyhow, that's how I'm doing it. But,
yeah, and I think now with all the uncertainty that exists in the market, there is and the potential for contracting growth just in the broader economy. I mean, something like gold now starts to become like an attractive investment, and I think that's what we're seeing. I mean, genuinely, we're about to hit all-time highs in the gold contract again. So,
yeah, if you notice, nobody's talking about it.
I agree. Yeah. Yep.
Yeah, I mean, you're not hearing on NBC, CBS. When those guys start talking about it, you get late in the game.
Right.
So, and we have none of that right now. Nobody's even, other than radio shows like yours, but kind of deal in investments and stuff, are talking about it. But the mainstream media hasn't picked it up yet.
Well, and that's the thing with a lot of the other shows. It's always just Nvidia, Tesla, or something like that. But I mean, this is. That is so volatile now. This I think really does, like a gold investment, or at least looking into it, makes some pretty sound fundamental sense as well. On top of these fantastic technicals that you're bringing to us. So,
that's the reason why I kept looking at the bigger time frames here.
Yeah.
Because I think something big's coming on. That's the reason why I presented this chart. Will it work out? Not sure, but it has all the ingredients that it may.
Totally.
And especially on this chart going back to 1993, we're breaking above this trend line right here. We couldn't hold it here, or this is a really breakout. But at least we get back to 225, and things do get on the monthly time frame, because I watch the monthly time frames a lot, especially when they're saying something. And as far as the top goes, this indicator is not even near intermediate term top.
Yeah.
And so it's intriguing. So I'm thinking, if you bought a gold stock today, would you be profitable or be buried in 6 months? I think you'd be profitable. So
yeah,
we'll see how that turns out. So
fantastic.
Did I answer all the questions about trend? Did he?
Yeah. No. I think that was totally satisfactory. So.
Because that trend, I think, for the year is giving a warning that this is. Matter of fact, our next show, I have a 100-day trend. This is actually at a level not ideal for the market, and I could show that again and telling me that equity market. I don't think it's going to be in trouble, but I don't think it's the best place to be. So I'll show that next Tuesday. It's a longer term chart, and it's just not conducive of panic, which is, again, panic is good for the market, because panic drives energy, and if you have energy in the market, it's good. So and right now we don't have a lot of panic in the market, so to me it's going to be a lackluster market.
Fantastic. Well, guys, go over to ord-oracle.com to get more from Tim. Tim, thank you so much for joining us. We'll see you Tuesday.
All right. Thank you.
Fantastic. Folks, we got the SPY trading off about 0.09%. JNUG, our friends over at Direction, trading up 5.75%. That's a junior nugget. That's a bullish 2x ETF. Composite off about 0.28%. Dow Jones Industrial off about 0.17%. We'll talk a little bit about Hood, GME. Would have been nice to buy those puts yesterday. You're off about 23.04%. Can't believe people still fall for it. Folks, we'll be right back.